Hi, I'm Joe Scarano from Arrays. It is important for nonprofits to track their expenses in three main functional categories: program services, management in general, and fundraising. This gives management vital information to measure if the programs they operate are sustainable with the revenue generated. But the true cost of operating each of your programs is not just the direct expenses of those programs, but a portion of the management in general and fundraising expenses that are needed to properly run and fund those programs. These additional costs are commonly referred to as indirect costs. Indirect costs include items that are associated with running your organization, such as administrative salaries, rent, utilities, office supplies, and fundraising. When calculating the total cost of running your programs, it is common to allocate a portion of your administration and fundraising expenses to the programs using an indirect cost rate. The combination of both direct and indirect costs should be considered when preparing your budget, and especially when considering a grant application. While indirect costs are necessary expenses for the management of your organization, many funding sources look at these costs as overhead and do not want their funds dedicated to overhead expenses. Nonprofits must get funding sources to understand that based on their business structure and operations, that the indirect costs are essential to properly executing its mission and serving their constituents. Determining the basis of allocating these indirect costs to programs is critical to securing the necessary funding for both overhead and program costs. Having a clear and concise allocation basis for indirect costs will significantly increase the chances of getting funds approved from funding sources. Don't forget to subscribe to our YouTube channel to learn more about nonprofit accounting and financial management.